Can you hear me, bro? Just type in chat if you can hear me. You should be able to type in the chat to the right. Just need to know if my oh, what's that actually? There we go. That was weird. Hey, how's it going? So with that said, I'll just have a go through what I think is happening. I haven't done this for quite some time. I haven't really streamed on YouTube either, so how's it going? Like, how's your day been so far? I'll just pop out the chat just so I can talk to you while. Just the interface. Everything's different. I'm used to streaming on Twitch, but yeah, everything's like a lot different on YouTube. Streaming from YouTube. That's good to hear. I'm not sure. I think the stream might be delayed by a few seconds. So when I talk, yeah, it might be a bit slow. Not entirely sure. So, whereabouts, what exactly are you wanting to know? Do you want to know what's happening with Rune at the moment? Do you want to know what's happening with BTC? Um, let's just drop this. Yeah, I'll try YouTube first. If I don't like it, then obviously I'll move over to Twitch. But yeah, this is okay. Okay. All right. Well, we'll start with Bitcoin. So first of all, uh, I always try and recommend never trade around these particular zones. Like, see where we were last night. There's a really choppy price action where we've got a pump to trap the shorts, liquidate the over leveraged shorts, then we kind of like drop back down. We mitigate this order block down below. We release the under leveraged shorts, and we kind of tap back into the zone to pick up that liquidity. Since you see here, we have quite a few. We had a little bit of liquidity down here to pick up. So this is typical of a W formation. Um, Generally with a W formation, we move higher, which we did a little bit, but it was just a long trap. Yeah, Tino too. Um, yeah, a little bit of a long trap. So we trapped the longs and we actually dropped lower. Um, and then that's when the EU and New York came into play. And generally with these Brinkses, right? So if you see price action move lower in a Brinks, it's actually setting up for a short trap to move higher, which is exactly what it's done here. It's trapped the shorts really low here and it's moved back up into zone to pick up all of the vector candles that it actually used to push price down. Now, currently, I like the reason why I originally thought we were going lower was because of this huge lot of liquidity we have to the downside. Uh, the market maker used to push price higher. And I mean, if we're seeing this on like the 1 hour and the 4 hour, it's a big area. Like it's a really big area of liquidity that the market maker would eventually want to move back down and pick up. And I mean, it's understandable if price is moving down and we've got liquidity down here as well as a imbalance where price moves so fast, it actually misses a lot of orders and stuff. So you got a lot of resting orders in here. Um, so you've got an imbalance plus you've got a vector candle. Generally, price action will move back down into zone to pick that up. So I assume at some point in the future, if not very soon, we'll move back down to test the 200, pick up most of the liquidity before moving up. If that, we can get a random wick down here, pick up this liquidity, and then we'll finally move up to make another leg because we've got all of this liquidity to the upside that the market maker needs to pick up. So the reason why I originally thought when we'll back up here, I'm like, yeah, we're probably going down to 222.5, which we did actually. We just did last night. Was because of all the resting orders down here on Bookmap and Trading Light and stuff like that. But yeah, so if you're wanting to trade, avoid everything around the 50. So anything around the 50 is really bad to trade. And I generally mark that with like a light yellow or a light white, and I just call it assess or avoid. So anything around the 50, you just avoid. Same here. Chop price action, anything around the 50. Because the moment you enter on the 50, say you go short around the 50 and it pumps up, where if you over leverage, you get liquidated, and then you have to wait through the upturn, and you're panicking because you're like, oh, I've taken a really bad position, I have to sell now in a loss, or otherwise I'll lose money. So if you're not the patient type of person, you're not going to wait like a couple of days. From this took about a day and a half, right, to establish a move further down. Um, it can get really, really messy. So it doesn't always happen, but it happened here on the way up. Um, we got a little bit of, you know, chopping price action here, closer to the 50. So I generally, unless you're on a downturn playing a retrace, so you're taking a short long, again, a short long, it's fine. But if you're trading with the trend and you're going down, avoid the 50 altogether. Like, don't touch it. Wait until the 50 is broken with a retest of the 200 or 50 for further continuation before you actually take a short. That's my advice. Um, Lower I think is more of a possibility. Like if you have a look at the charts, right? You look at all this liquidity just underneath here. We see that um, we've got some price action where market makers have set up a short trap to liquidate the shorts to push price higher. Maybe we exceed this higher here, maybe we don't. But certainly this whole area is one big trap for both bulls and bears, and I'll tell you why. So on the weekly, we come to the weekly, we are trapped between 25k and 22.8, right? So if we close below here, we're going lower. we're picking up this liquidity, this huge demand area right here, picking up all this liquidity. Now, if we close higher, so we say we close anywhere above 23.8, we're coming up to pick up the rest of this liquidity because we know there is a little bit of liquidity here from market makers. We're going higher. So that means we're going to probably come up to 26.5 to clear up this liquidity. Maybe we pump even more and we test the bottom of the Bollinger Bands to clear up this liquidity here, this supply, huge supply area. But that's where we are. We're in no man's land, so we could either, you know, we could either come down further. We come down further. We know that we're coming down to pick up this liquidity. We come up. We know that we're coming up to pick up this liquidity, and we can take a position based on that. Now, I think where's the monthly? Uh, Yeah, so this is another thing too. So look at this huge market maker vector candle, right? So we know that there is a lot of imbalance here, and we know that there is a lot of liquidity here. So we've already cleared up at least 1/3 of it. Um, Generally, if we want to continue up, we'll usually clear 50% of the previous move, and then we'll continue up. So here, I've got it marked like around 21.8, but it could come down a little bit lower. But if it does break the 50 percentile, generally we move all the way back down to clear up the rest of the liquidity before coming back up and retesting the 23.1. Um, but yeah, that's kind of like where I think things will headed. If we close above here, clear up the rest of this liquidity, move up higher, probably at the top of here. We could even, yeah, we could even come up to here to clear up, or we could clear up 50% of this and move back down to clear up this. So it really depends on where we're going. Um, so if we come down, clear up the rest, we're coming up, probably clearing up the rest like that. Move back down to clear up the 50%, and then we'll continue up higher like that. That's generally how the market maker moves. Or if we actually close above here, we'll probably retrace a little bit, come up, test here, come up further. Maybe we pick up that, maybe we don't. Maybe we just drop straight down from here. And we do some kind of like an ascending monthly wedge or something like that per se. But generally, our real move is in the opposite direction to where we currently are. So like we're moving down to clear up lower levels of liquidity to pick up demand. We're looking to go higher. If we're moving up to pick up higher levels of supply, we're looking to fill market maker vectors, pick up liquidity, trap longs, and move lower overall, macro wise. That's generally how I look at it, and I've been pretty damn accurate um, in the way that moves. But yeah, do you have any other questions? Oh, come back down to the hour. Got some vector here. Where are you? MK, do you have any other questions, bro? Oh, you're all good? Okay. I can go into detail as to where we are relative to Rune. Oh, sorry, where Rune is relative to BTC, because that's really important. I feel like Rune's diverged a lot, given given the where BTC is. So let me just give you an example of how much um, Rune is. I'll just make a new tab. I'll give you an example as to how much exactly Rune has diverged. So last night, I think, oh, sorry, the night before, right? we were, so earlier on, 2 days ago, we were down here. Okay, BTC was here, around here. Now, BTC moved up a little bit, not a great deal, just a little bit. Rune pumped like crazy. So Rune moved, I don't know, something like overall 14%. BTC moved 4%. Now it's usually custom that alts move about 2 times to 2.5 times. So that's 8.6. Rune moved 14%. Now you can see why this retrace was necessary. So we come back into zone. The reason why is because we're overextended. Whatever event happened with Rune, I have no idea. But we're overextended. And generally speaking, Rune has a habit of overextending in its upwards move, and then it pulls back hard randomly. Um, so yeah, that's the reason why we got such a huge dump last night. Was a correction per se. Um, now I I honestly feel like it's necessary for Rune to actually come down lower. And the reason why is because we've got all of this liquidity down here, all of this down here, and here. At least about, around this range, maybe the 2.395 makes a lot of sense to me. Um, mostly because there's more liquidity to the downside, if you have a look, than there is to the upside closer in range, okay? So it means that Rune has to move more to the upside to clear up more liquidity or more orders. Whereas to the downside, there's more liquidity to pick up more demand. So it makes sense to move down lower for this to actually be a bearish pennant to move down lower, pick up this liquidity and pump out of the zone. But anything could happen with Rune. It's kind of like a hit and miss. But yeah, so far that's what we've got. We've got kind of like a ascending wedge where we've literally pumped out of it twice. So we've kind of gotten rejected by this area right here, as you can see. We've pumped out of it 3 times to be precise, and we've been rejected every single time. And we've fallen right back and up into this macro structure, which is just building, basically getting larger and larger with every move that it makes. So if we have a look, maybe the 4-hour, the 9-hour actually, was it the 9-hour? Yeah, the 9-hour, 10-hour, 10-hour. So we've been rejected by the 10-hour 3 times. We've trapped the longs, come down, trap the shorts, come up, trap the longs, come down, trap the shorts, and then we finally got rejected again. And now we're back in the macro structure for the 3rd time. So, I kind of feel confident that we will likely come down lower. And if we do see this play out, I mean, anything's possible, but yeah, that would be devastating for Rune. But yeah, I kind of feel like this is more possible. We come down maybe 50% of that, come back, retest, and then pump out of the zone and just continue up like that, fake out to the bottom. That's what I think. Yeah, technically we should drop more. Technically. The charts show it. The liquidity shows it. The orders show it. I mean, look how close to liquidity here. You've got all this liquidity in order here, 8.27%. But then if BTC wants to, sorry, about 13%. But if BTC wants to pick up all this liquidity, it's got to move twice the distance. And it's got to actually exceed this resistance, which is more work. Like it's more work to break this resistance that has already been rejected 3 times by, and there's a weaker rejection every time. So there's less liquidity coming in at this area, and it's just rolling over faster. And it's having to bounce off this 50 every time before it wants to try and make a new high. So in my opinion, I think it's more possible to come down here, sweep low, pick up more liquidity, and then finally break outwards, because there's just not enough here. we have a look, we can see that the RSI is compressing. We're stuck just below the market base, which is this line here, middle of the Bollinger. Um, so we could expand down down about here around this area, and then we could expand up and make a new high. But yeah, I honestly don't know if this shape's been invalidated or not. That's why I'm taking the new kind of pattern, which is the current pennant. Problem is with pennants usually represent the previous move. So if we're coming down into the pennant, generally that's a bearish pattern, okay? But then if you kind of like zoom out a bit, you can see that this moved up. So even it didn't touch the top of this. So technically speaking, this is kind of a bearish pennant, but we could still break out to the upside, hence why I put the order block here. So if we pump out above this and we back test this and confirm it, we'll probably come up to about 3.49 around this zone. If we drop down, I'm seeing we hit this order block and all of these orders here, where it was almost the lowest, and we're coming in at about 1.79 easily. But yeah, that's why I've got like a back test here, then we back test this, fall lower, back test this, come back up to back test the pennant, trap the shorts, drop all the way down after liquidating the shorts, and we trap the longs thinking it's going to break the pennant to the upside, and we come all the way back down to pick up the orders in this area. And in which case we pump out of the zone, because then, well, there's no need to really be down here. I mean, we've got barely any liquidity here. We've created more liquidity moving down, so we want to come back up to pick up all of this liquidity for new highs and stuff. And that would essentially follow the was it Elliott wave theory and Wyckoff theory too, with just a UTAD, a preliminary supply, last point of supply, sorry, level, come down, another last point of supply, then we create the drop for new levels. Yeah, yeah, dropping will be a fake out, I think. I don't think, I'm not entirely sure, but I honestly don't think Rune will create a new low. I think Rune will just move back into the zones it's already moved in. Mostly because it's always seems to be overextended in every one of its moves, and its corrections are not always complete. So if that means that Rune overextend pumps in the direction that BTC is moving, but then when BTC reverses and BTC dominance comes into play, Rune corrects itself by dropping hard, but it doesn't completely correct the divergence that it created when it pumped harder than BTC by like 3 to 4 times. And every time it does that, the divergence adds up. So there's like a difference between how much Ethereum moves and how much Rune moves, right? And if Rune's pumping more than Ethereum or any other alt, then relative to BTC, then a divergence is created. And then eventually you got this huge divergence or this huge disparity where Rune will just be so far more ahead of other alts. And that in my opinion just means that with all of that added up over this duration of time where we move back into this zone to pick it up, there's just gonna be too much of a divergence to really make a new low. And in which case we'll just continue up higher. And the choppy market action where we pretty much just like come in a zone, clear up this liquidity, maybe come down lower, maybe come up higher, and we just keep doing that, right? And then we can consolidate for a bit, come down lower, and then move up higher. But yeah. Just gonna have a drink of water. So, are you wanting to know, um, like how I trade and stuff, or? Yeah, yeah. So 3.49 and 1.79, correct. Yep. And just remember, the move that we make next on Rune will define our midterm move, and our midterm move will define our large term move. So always think in opposites. So like, if we move down, think that our retrace will be slightly larger, um, and in which case our retrace being slightly larger will mean that our larger correction from there will be larger from that as well. As I said, you can look at the charts here. We move down, small retrace, say like, sorry, say like here we move down, we hit this order, we come up, retest, get rejected. See our retrace is here, then our retrace is larger, as like Elliott wave theory. We come down, we pick up this liquidity. Maybe we only pick up 50%. Who knows? We only need 50% to drive price higher, so we pick up a list demand, move higher. Um, we come up here. There's lower time frames of liquidity as well. We've created more vectors and imbalances moving down. We clean up all of this. We pick up the difference, and we actually drive price lower, picking up all of this liquidity, and then we just pump straight out of the zone and just go freaking nuts, basically. But you want to be looking at definitely buying down here if we ever come near this price. Or you can take a short scalp trade here, or a short down here. Um, but you mostly have a look at where we are relative to BTC. If BTC shows promise of moving up, then obviously we would look at setting up scenarios based on longs and stuff. Where are you? Ultimately, we got to keep doing these videos. It's very informative, much easier to understand. Yeah, yeah, man, I can definitely do that. I wonder if the other guys will like it too. It would mean a lot to me. I don't know, I might start a trend with it and stuff, but definitely got to give credit to Tino and Steve. I've been watching a lot of their videos, studying a lot, trying to understand the best way of trading is. And yeah, okay. Shorts and longs. So I can give you a good example if you want to learn that. So let's start. Let's say we want to trade Rune because I only really like to trade Rune. I'm not like a huge fan of other coins, and I say this because Rune is juicy as fuck. Like when it's going your way, it's going your way. As you can see, as you can freaking see, man. Rune is just a juicy altcoin. Um, and that's really the only thing I'd trade. Like sometimes I trade BTC, sometimes I trade Ethereum, but I've made the most money out of this coin. It's a really good coin, really good coin. Anyway, so let's turn on the market maker, um, and we can keep the zones on. I generally the hourly is the best thing to trade. In my opinion, if you want to use, say you want to use lower time frames like the minute, so I'll recommend the 1 minute, the 5 minute, and the 1 hour. And the reason for that is because in the 1 minute you can see what's happening now, so you can see um, what's being established, what's going to happen next, basically. So I can see us bouncing off the 200, making a small retrace, coming up like this, coming up here, picking up this liquidity. Maybe we move up to the psychological high, then we drop down and continue down like that, making a double top, trapping longs, and obviously trapping shorts, liquidating shorts up here. So that's what I think could happen. Another thing that could happen is that we break this level, we kind of like you know, build some short positions as we slowly move higher. We kind of test that, maybe we break up above it, and then we kind of like drop below it. So we get people committed, like the longs committed to coming in that trade the short time frame. We get them committed to higher prices. The market maker sells into them as he builds the shorts, and creates like a small head and shoulders, and then we just drop off the face of the planet. In which case, we will move back up to test this area, this zone, order block zone, from the 800. So generally we do that. Maybe we'll come down a little bit lower. But yeah, so um, things we've got to pay attention to is a psychological high. The daily open is really important. So what makes me think that we could be going lower is the daily open. Now, we always, when we say we pump say we pump away from the daily open, we always come back into that zone all the time. Mostly because the daily open is really important for the market makers. So I'm seeing it a lot. So if we go back to, where is it? Daily open, where are you? Daily open, I'm blind. So we got the high low of yesterday. Let me just quickly find it. We got psychological levels, we got Frankfurt. Show market sessions on weekend. No, I don't want that. AMR, no. Show high daily. Weekly. Where's the historical? I'm not sure if he has it there. I swear I turned it on. Let's have a look. See if I have them open. Nah, uh, it's not there. I don't know. It's an actual option where you can see the previous daily opens, and you can see how prices, say the price is here, right? The daily opens here. We've pumped away from the daily open, and look at that. We come back into the daily open. I'll just say like the daily opens up here. So we open the price here. We come up, we pump away from it, we come back down, create a head and shoulders, and drop down lower. And daily open's super good thing to trade, right? I've missed so many awesome opportunities with the daily open just because I didn't trade into it, right? Um, and the same thing, if we get above the daily open when it just opens like this, so we come back up to retest and we pump and break it, this is a great entry because we know that price is going to probably come up to mitigate a previous order block around here, and then it's probably going to drop back down and come back into zone to tap the daily open. And in which case, if it does tap the daily open, this would establish a this. We come back down, we retest the bottom of this trend line. And to me, that's bad because then we're going to see lower prices. But yeah, that's just my opinion. So we kind of just use all of that as confluence per se. Yes, so that should drop down more. It's very informative, much easier to understand on. They will love. Okay. Alright. Are you still there, bro? Just because I want to show you what I do with my positions. MK, you there, bro? Hmm. Let's see what this does. Blue vector candles, stopping candles. Are we going to pin to the high and then come back down? This ultimately depends on what we want to do here. So generally, blue candles indicate a impending reversal. So if we're blue candle pumping, we're clearing up higher levels of liquidity, and then we're probably going to pin to the high and come down lower. But yeah. um, I'll just wait for you to come back into the room. It's all good. So we got a pivot here. Get M3 up here, being rejected by M3. Retest rejection again would mean that we're coming down to M2, which is down here at the bottom, back towards the daily open and psychological low. So I assume that would probably be entering this area here. Plus all the liquidity here, fair value gap from moving up, balance. Okay. Would you like me to teach you about how I do my trading? Like how I take my positions and stuff? I do a super safe way of trading. Well, I wouldn't say super safe. I would say it's very forgiving. Very, very forgiving. So you always end up with something. Um, and that's a great way to trade, um, in my opinion, because the more your portfolio grows, the more that you can use to trade. And you want to think of it as a consistent means of growing your income, basically. So just let me know. Just message in the chat if you want me to let you know about the way that I trade. Okay. Yeah. It's a little bit delayed. Um, okay. So, let's go here. So there's two ways that I trade, right? So on, say for example, we've established a high, right? And a rejection, so I'll do this again, and we come nowhere near it. And so we get rejected, create a dark candle. I essentially put down a position somewhere around here, and then we fall lower. There's actually a better way of doing that though. So like after a while it becomes instinct, but like I understand it can be frustrating not to know exactly where you want to kind of take like put the position down and stuff, but there's also this. So I rely heavily on um, uptrending and downtrending lines in terms of taking a position. So say for example, um, we want to take a a sh so for example we've pumped out of here, right? And we've got a huge drop. So you take this line and you kind of put it in between these two and this one here. Or maybe you'll come down lower and you'll put it like right here. So you get the most candle touches as possible. And then the moment you see a break and a confirmed white candle, you can take a long entry. And this is on the 1 hour, so you're still getting like 1.737%, which is perfectly fine on like 5x leverage. That's like over 5 to 6% on your trade. Or you can wait for a back test, so it comes back into zone and then it continues to pump higher. So in which case you'll create a new line, an uptrending line of like this, for example. As long as it maintains this momentum, you can stay in your trade. And it pumps right out of the zone, pretty much comes up here, consolidates sideways, and then reaches this level, this order block up here. But I find it way more effective for downtrends, mostly because if you have a look, the candles like really respect the uptrending line on the downtrend, and in which case when it finally breaks it, you know it's going to go lower. As you can see, every single time it's ever broken this line, it's gone lower. And I mean, if you're a conservative trader like me, where I only take like anywhere between 10 to 20%, but I consistently trade, um, that's an easy like what 7.86 8, 6 times 7, because I do 7x leverage, that's 55%. That's huge. So if you got like $500 because you're building your positions, that's 55% back on return on investment. So you just made like over $250 um, in less than like, say, like 3, 4 hours, um, which is really, really good. I don't know how much you use. Was it? No, problem yes, but let's hold off for a minute, but let's take a break. I think your videos should be segmented into a certain amount of time. That way it can stay focused. Okay. Alright, that's fair. No worries. I only just read the chat. There's a lot more that I want to kind of cover and stuff, but like I'm new to this. I don't really do a lot of educational material or just talking about where things are at or what things like what's happening. But I would like to kind of do both about, updating on where things are going, where things are, I mean, in my professional opinion, as well as just teaching, like teaching about like what I feel is right, what I feel is wrong, like that kind of stuff. Back here into zone. Yep, so we're pumped out of the zone. We're coming in high for the psychological high. We're creating green candles, so we know we're creating imbalances in the chart. Um, so we know we have to move back into this zone at some point in the future. Um, so I'm thinking we're going to set up a long strap. We pump right up into this zone. Maybe we break that high, and then we maybe come in higher, and then we just drop hard. Because of all of this order block right here, it's freaking massive. All of this liquidity can act as a resistance, and especially if we close as a blue candle, which we didn't. We got another green candle. So, I mean, I personally wouldn't go long, mostly because of this. Here, it's just like you can see that the market maker is accumulating, especially if he makes a new high. I would never go long into that. Um, I would, however, go long into this. So we see it move down and it comes back down to tap into the liquidity and it moves decisively out of it. This tells me that we're going to get another pump. So we take a long entry. Maybe our stop loss is just underneath the low, or maybe when we want to build our position because we know we've already dropped like massively from here. So even higher up here, obviously. But if it, we can take a long here, we can take a long down here, we can take a long down here, and it'll bring our average all the way down here. By the time that it's finished picking up the liquidity, it will reverse pump out of the zone and you'll be able to make a huge profit on that. So that's generally how I trade. But not until it's like fully moved. So I'm just watching Rune at the moment. Also watching BTC. So we're consolidating, pins to the low. So pins to the high, back testing 200. Working our way up to the 200 EMA and the market fall, as well as a psychological high, which is a huge area of resistance. Rejected, 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 rejected. Be interested to see where things go. But yeah, I just think this is all very trappy. Back in, pick up the vector liquidity before we move higher to pick up this one. No. Oh, we're pushing up higher, leaving behind all this liquidity. I wonder why they're leaving all this liquidity behind. Let's see, let's see. Let's see if we get rejected by something. Hmm. Okay, moving back into the zone. We're gonna pick up this liquidity. Red vector candle, maybe? Or pink? Oh, we picked up a little bit. Is that enough? Do we need to pick up more? No. When I get my subscription sorted for Bookmap, and I learn a bit more, I will include that in my videos as well, since that's a huge part of it, where I basically can predict the future. That's how I knew the 22.5 was the area that BTC wanted to move into, was all the liquidity around that area. Man, BTC is Rune is just so much more bullish than everything else. Look at that. It's already met its recent high, whereas BTC is still struggling to get past this part. Fuck. So moving decisively out of the zone, going up towards the daily high, and back towards the session open, or daily high for Sydney and Tokyo. Still leaving behind all this liquidity. I wonder why they're leaving so much liquidity behind without coming back into zone to pick it up. It really makes me wonder what they're doing here. It really feels like a trap. Because if they were respecting this trend, this next leg up, they would probably clean up a bit more of this liquidity. They wouldn't leave so much to the low. So let's get this. Let's get this liquidity and let's move back down into zone. That's what I think. Alright, well, I'll probably end the stream there. I just wanted to get things sorted, just kind of describe where we're at. Um, I will post up a video link on Telegram, basically, every time that I do a live video, just so anyone that wasn't in the live stream, they can go back and watch basically all my updates and stuff. Um, but yeah, thanks for dropping by, and I love you all, and I hope you all have a wonderful day slash night. I don't also MK. I used to use KuCoin a lot, but there's a lot of scam wicks, and you're likely to lose a lot of trades based on the fact that its algorithm looks to try and liquidate you as much as possible. So if you're close in range of the opposite move, KuCoin will randomly wick up or down, and it will liquidate you when it comes to leverage. So it's not an ideal platform to leverage on. If you're going to use leverage, I'd go on something like Bybit. Way better. It's more accommodating. No scam wicks. Withdrawal and deposits super easy. No KYC or anything. Hmm. That's alright. BF, how's it going, man? I was just basically wrapping this stream up, but pretty much I've got all of everything's recorded, so you should be able to go back and look at my playlist and stuff like that. We'll post it up in the Telegram group. Um, but yeah, I was just pretty much just going through where we're at in terms of Rune, where I think we're going to be going next, and what each move will pretty much establish moving forward. Um, Basically, if we go up, then we're probably going to go down, and if we go down, we're probably going to go up macro wise. All right, take care, guys. I hope you all have a lovely night. Thanks for dropping by and checking it out. I really appreciate it. Take care. Love you all.